Walt Disney after a fresh bundling of sports content. Going to be one of the highlights. Nicole Petallides and Kevin Green with me this afternoon. Wynn Resorts earnings, a kind of a China play that's not pure China and doing a little bit better than Chinese stocks. And then we got ARM Holdings, which looks like it's going to be the first mover, and a lot of buildup with the giant rally in ARM going into its only second ever earnings report. Good afternoon, team. What are you excited for here, Nicole?
I'm excited because I saw a statistic that in December, Macau revenue jumped 433% year over year. That's gotta help Wynn. I'm excited for that. For Disney, I want to hear about the profits amid all the proxy battle noise. And for ARM, well, you know what? Apple has been creeping up on Samsung, and ARM is a supplier to Apple. So maybe some good things there.
Okay. Thinking about the tech side first, why don't we look at ARM, second report ever. Shares rallying post-market here with the good little bounce, almost to $90 at one point. Right now we're trading 86. I mean, that's a 10% plus pop. And numbers coming into this last time around kind of left some questions still about sort of the profitability elements. We talked about it this morning a good bit, KG, with the revenues expected to hit about 760 million-ish or so. They are seeing some growth. They are going to be connected in theory to AI developments, but right now this is kind of more a pure kind of mobile play. Tell me what you're going to be looking for here, Kevin.
Well, they actually did beat both on the top and bottom line, and actually their top line beat was actually very impressive, to say the least. I think that's why we are seeing a pop to the upside here. And they're also talking about the demand for some of its IP and the ability to grow their royalty business as well, which I think is another area that did see a little bit of weakness in the last quarter, but now we are seeing a little bit more strength. In the last quarter, we also saw their guidance coming up a little bit short when it came to the revenue. So once again, they kind of lowballed their expectations, beat those expectations, and now they're going to be guiding a little bit higher here. So I think right now, Nicole kind of talked about it. They're partnering with Apple. They have some other partnerships out there with NVIDIA and things of that nature. And I think they might be a winner here in the near term by providing designs to be able to meet the AI race. And that's what they're known for. I'm really looking forward to looking at the operating margins. I think that would be the biggest question mark from analysts because the expectation was really wide. But just from the headline numbers that we are seeing right now, it's a pretty decent report.
Yeah, huge beat, Nicole. That's going to be good for chips, which already just have been rallying nonstop, basically.
Yeah, I mean, the group seems to be very favorable, getting the demand. We had Taiwan Semi in mid-January, which did well and brought the group up. I mean, these things were moving together, and they've been driving the market. They're back in the lead to sort of drive this market higher. I mean, what happened to the China slowdown? I was waiting to hear some of that, but as we know, according to some channel checks, the iPhone was still doing very well in China. Some of the outlooks are coming out now, seeing the fourth quarter adjusted EPS 28 to 32 cents. That is better than the estimate of 21 cents, right? Yeah. And the revenue, 850, 900, is better than the estimate of 780 and change.
ARM's now,
wow.
We're trading $91. We're talking about almost a 20% rally, right? 70, close to 77. We're getting there, about 18%. I mean, absolute ripper. Safe to say they blew the doors off here, I think. 28 to 32, 21 estimate, as Nicole just mentioned, for the guidance. I mean, monstrous. So I guess margins, schmargins, KG, this is pretty good guidance.
Yeah, definitely. Now, even if the margins do contract, which we are expecting for this particular quarter and analysts were expecting for the next quarter, it would probably offset their beat when it comes to their revenue guide, would probably offset the concern for those margins. So I'm right there with you. I think this is a really decent report. Curious to see how they're going to react here after the conference call, maybe getting a little bit more hype when you're starting to hear more about the product launches and the partnerships as well. So this might still have some room to run here in the after hours, Ollie.
All right. Let's flip it over to Wynn. The good times are rolling, and that means the dice should be too. here, China, everywhere. Wynn's up as well. Initial pop of about 3.5%. Earnings per share, $6.19 for the fourth quarter. Adjusted down to 191, beats the estimate of 115. And the sales also beat pretty clean. 184 versus 1.7 billion. Looks like a nice little surprise, which has been kind of hard to come by in these companies, Nicole.
Yeah, and I think the casino stocks, have had so much volatility because they were so consumer based, and there was some back and forth. There was love in Las Vegas, then there wasn't. But we started to hear people going back and spending more, not only at the tables, but also on the experiences, the dinners, the shows, and things like that. Macau, if I remember, started to get a lot of green lights, as I noted that that data where they said 433% year-over-year growth just for the month of December. So seeing this double beat somehow doesn't surprise me if you're going to take that kind of number into account. So that's good overall. I mean, the revenue growth here at 83.1%, food and beverage expenses to 16 million. So they do face some expenses and some, provisions for credit losses, 2.4 million. Margin looks pretty good, right? 19.4%.
Yeah.
Not bad.
Yeah. Looks like pretty solid numbers, especially when they still have China kind of dragging a bit here. We've seen pops fade, though, quite often in the last couple years for this company. What's going to determine if that happens here, Kevin?
I think it's going to be their strategy moving forward, especially when you're looking at the operating expenses and if they're going to expand or increase those expenses, especially if they're trying to double down in Macau, which the Macau numbers are great, but Macau has been, lagging when it comes to the analyst expectations. So now the question is going to be, do you want to double down in that particular market, or do you want to put those dollars elsewhere? They also did get a little bit of a windfall when it comes to their adjusted earnings per share because of a property adjustment here, or basically just some tax benefits. So that did also push them over the top here in the near term. I think it is just going to be about the demand story, and people are going to ask about China, and they're going to talk about the Macau operations, and if they are seeing a little bit of slowing because of the economic data that we are seeing from there. But I'm not sure if that's going to be a near-term concern for them. I think they just have to manage margins, continue to keep margins where they're at, and not try to spend money in areas that might not be profitable in the next 2 or 3 years.
Okay. So cost controls, diligence.
Yeah. May I jump in?
Sure, absolutely.
I'm going to add that they saw increased operating revenues not only in Macau but also in Las Vegas. I love when things are going in the right direction for a company, as well as an income tax benefit related to an allowance. So income tax benefit, that sounds good, right? So you had the growth, the operating revenues from Macau and Las Vegas, and they can't say enough about where they are going. United Arab Emirates, UAE, where they're building a property which is going to be, it's on the development front, a must-see tourism destination in the UAE. Go where the money is. Right. Wynn Al Marjan Island continues. I mean, they're very excited about this, and so another vehicle for them to bring in the funds.
Great point. The Boston property, too, seems to be clicking off now as well, so good diversification of casino businesses outside China. Let's talk Disney, where diversification has gone wrong over the last couple of years. Seems like they're maybe turning a corner, at least in the market's perception of their strategy. We already talked about how they were the outperformer compared to everyone else involved in that sports package today. And now we're getting a real juicy rally in Disney, back above $100 to 106. It's like a 7% rally in the aftermarket here, and would be the highest since almost a year ago, since like February. So Disney, which beat, the earnings met, and then the sales actually missed a little bit. But they're talking about reaching profitability in businesses attached to streaming fourth quarter this year of their fiscal 2024. I think that's definitely a key part of the guidance here. And they also see that their bottom line will increase by 20% to $4.60. The outlook from the street for the fiscal year 24 EPS was quite a bit lower than that. So, I mean, this looks like the first major upside surprise for Disney we've seen in a couple quarters, Kevin.
Yeah, definitely. And they did actually beat when it came to the Disney Plus core subscribers for net additions as well. I think that's another bright spot for this company. I mean, the bar was very low. Obviously, they were going through this transition period, and they've been doing that for the last year and a half, if you will. They've had some PR issues, but you are continuing to see that they are starting to expand in certain areas that were weak, like streaming, and then their parks business continues to show a fair amount of strength here. So I think that's going to be the key. I think the question on the conference call is going to be this new partnership that they are having for the sports deal. How is that going to really benefit them? Because they are probably the biggest contributor when it comes to the sports content as far as value. And is that going to actually cannibalize some of the other platforms that they're offering? I think the market still has a little bit of a question about that. The fact that they believe that they're going to have some profitability by the end of Q4 fiscal year 2024 when it comes to streaming is going to be pretty decent. And now you have to put the question out there, Oliver, are we going to see a dividend being put back into this? Actually, it just came out, declared a cash dividend of 45 cents a share. So that was also the biggest hurdle that we saw for this downside move, is the cut to the dividend. Disney has been a stalwart when you're looking at a lot of portfolios that have been managed over hundreds of the last 50 years, if you will. So cutting that dividend also did turn off some investors. So maybe adding that dividend and increasing it is going to attract some investors back into this name. Let's see if that's going to be a trend moving forward.
Buyback too, Nicole. I mean, it seems like Disney really wants to make a stand here and impress investors on this report.
I don't know. Are you impressed?
Kind of.
See, earnings
Dividends
per share.
back at least.
I mean, here's my thing. I'm a little nervous about a couple things. The EPS in line and the sales, miss. Okay. I can handle that. And the outlook, they're telling us about the profitability in the fourth quarter of 2024, which at that point they can push back into the new year. So they sort of give you, it's sort of a dangling the carrot type of thing. The one part that really makes me truly unhappy to hear, Disney Plus subscribers decreased sequentially by 1.3 million. I mean, they do not have full penetration.
Saw that.
They are not the biggest. They're not the biggest player. They have so much territory to take over. How are you losing Disney Plus subscribers when people with 6-year-olds cannot leave their home without their, the Disney Plus, contraptions on Apple Box or however they're going to do it. I just don't understand how they're losing. And I feel like Nelson Peltz is not going to give it up. And this cash dividend, I'm glad to see it, 45 cents, up 50% from the last dividend. Is that a big dividend? Meh. Not a big dividend. I don't know. And I feel like there's uncertainty when it comes to this deal with Fox and Warner Brothers. Is that going to be the best deal for ESPN? Hulu was a bright spot. There was some growth there, and that was a bright spot. So I do like that. I just feel like I'd like to read more about this between tonight and tomorrow morning because there are some question marks.
I think it's a good point on the Disney Plus still sequentially declining. I mean, if they're going to give a profit outlook, it helps offset that because that's been kind of the main margin drag. But yeah, I mean, they still have got to keep people in and prevent the churn, seems like. All right, market's liking it though, giving them benefit of the doubt, giving a little money back to shareholders. Thanks, guys. Kevin Green, Nicole Petallides, nice analysis. Thanks, guys, very much.